Here's Tupperware. Let's take a look at this chart and let's see what it was doing just before it made this phenomenal run. All right, so you see you have this markdown period. And whenever you see these markdown periods, you want to put your trend line on. There you go. There's your trend line for the markdown period. Then you come into this area here where this is a double bottom. The double bottom is characterized by two low spikes in price over a period of, a few weeks or whatever. You kind of have a smile here on the volume. Smile. This is obviously a smile. Smile on the volume. And then beginning right here, and that's the low on the chart, the on-balance volume slowly starts creeping up and it never makes another low. That's significant. That tells you that at this price level here, there's more buyers than sellers. So let's just watch it. Here's a smile in the on-balance volume. There's a corresponding smile in price. We hit the trend line and bounce up, break through the trend line on a heavy volume. This is your clearly definable entry point with a stop loss somewhere below there. And now volatility sets in. You could have traded this from a bounce from 390 all the way to 6, and that would be your first trade. And then as you watch for the consolidation, you have another clearly definable entry point. If you're using the volatility stop, you can use that as your entry point because it flips back and forth depending on the trend. If you don't have that, well, then you're just going to buy a break through the previous high, in this case 829. And here's your break above 829. And as you see, there's a volume spike right there. That means a lot of people were watching this stock and they're watching this level and they bought it. And look at it go. Here's another consolidation period. This gives you another opportunity to buy. You could buy again at 1677 with a stop loss down here. Let's see what happens. Boom, it goes up again. Another rise. And then you probably would have got stopped down at here at 2147. $5 a share, not bad. And then you have another area here of consolidation. If you wanted to stay with this stock, you could have bought it again right there because it's still continuing the same trend. And so now you're long again from 25. Stock's going up, up, up. Boom, stopped out right here at 30, so that's $5 a share. And that was the end of the run for Tupperware. But what I want you to see is that how when you have a stock that's about to make a major move, you kind of have the same things repeating themselves over and over again. And that same thing is volume spikes with smiles and rising on balance volume. And here's a chart that